Fabulous. Hello, everyone. Happy Tuesday. Welcome to our fabulous, I guess this is our finale of our sustainable finance series. And I'm absolutely over the moon because we have with us today the co-founder of Bank.Green, Zach Gottlieb, who is going to be telling us a little bit more about sustainable banking. And this was just a really happy coincidence because basically I discovered Bank.Green through one of our previous sustainable finance guest lecturers and reached out and to find out, if we could basically promote the platform because it's so brilliant. And Zach was kind enough to not only say yes, of course, but also said, would love to come on and tell people a little bit more about what we do and why this matters. So absolutely thrilled to have you with us today, Zach. Thank you so much for joining us. So as always, if anyone has any issues technically or anything, please feel free to pop in the chat. I will be around to help with the technical stuff. But otherwise, I think if it's okay, Zach, I'm going to let you introduce yourself and take it from here. And then, of course, at the end, we'll have some time for questions and everything. But we're here to hear you, not me. So, Zach, thanks for joining.
Sure. Cool. Thanks, Caitlin. Thanks for having me and pleasure to meet everybody. So I think probably best just for me to jump into the presentation that I had, and I'll share my screen and hopefully Zoom won't cause any issues. Desktop 1, desktop 2. Okay, desktop 2. Let's see how this goes. I'm clicking share, nothing's happened yet. Allow, one second. I need to change a system setting. Didn't realize one second. Add Zoom, yes, okay. Use password. Quit. You know what? Just my computer is
I'm starting again. Brilliant.
Good timing. Perfect. Okay, so let's kick off. So this is a quote from Bill McKibben, whom you may have heard of, famous environmentalist. This was the title of a New Yorker article that he wrote a few years ago that really struck a chord with us here at Bank.Green, and it's kind of an expression that we've rallied around since we were formed 3 years ago. So money is the oxygen on which the fire of global warming burns. Just something I'd encourage you to keep in mind as I go through the rest of the deck. So my name is Zach. I'm the co-founder, as Caitlin said, and the executive director of Bank.Green. We were founded on Earth Day in 2021 after a few of us who've been working for a climate movement known as Extinction Rebellion decided that there was a lot more that needed to happen in this area. In fact, I was running the blog for Extinction Rebellion. One of the writers came to me one day and he said, I've come to this realization that my bank is funding billions of pounds to the fossil fuel industry and kind of doing it behind my back, because from their marketing, I would have no idea that this was happening. As a climate activist, I cannot tolerate this, and so I have to switch. And so he wrote an article that was kind of a part expose of this information and part diary entry of him transitioning to a more sustainable bank called Triodos in Europe. And this blog article really took off like wildfire. Like, it got so much more engagement, comments, everything than any other article we published. And to us, that was kind of the canary in the coal mine, and we realized that there was so much more that needed to be done, fundamentally to fix the knowledge gap in this area before anything else. And then obviously, once we do that, inspire people to act on that knowledge. So that's the very nutshell story of how we got started. We're volunteer driven. So I actually still have a marketing business that supports me. We have a number of revenue generation strategies in the pipeline. So I'm hoping the next time I do this presentation, I won't need to say that. And personally, I do what I can to sort of fight the climate crisis on a personal level. I obviously volunteer for Bank.Green, but I fly there, so I eat less meat, that kind of thing. I do think it matters. I think huge systemic shifts do need to happen, but I see us all kind of as nodes on a network that constitutes that system, and even down to the level of the individual. So that's kind of my personal philosophy. I don't try to force it on anyone. But yeah, I do what I can there on, as far as my carbon footprint goes. So what have banks, I guess if you guys have been attending the sustainable finance course with Caitlin, then you probably have some answer to this question, but I'm going to get maybe a bit more granular here. What have banks got to do with the climate crisis? So first of all, nearly all companies and businesses in the economy depend on banks for working capital. So they are kind of the engines, the economic engines of society. Through their conditions of finance, they can impact the behavior of companies in all other business sectors. And of course, amongst the companies that the banks support, unfortunately, are fossil fuel companies. And fossil fuel companies are directly responsible for the production of greenhouse gas. So in what ways are banks helping these companies? So there are three primary ways that banks support fossil fuel companies. I'll actually go from right to left. They have asset management arms, which allow them to invest clients' monies directly into fossil fuel companies. They help fossil fuel companies when they need to go public on the stock market, when they need to merge, all these other kind of financial services, and they take a fee for that. But when you actually crack the numbers, you see that financing far and away exceeds the other two as the primary way that banks are actually supporting fossil fuel companies. And that means they provide loans to them, so debt financing, and then they also underwrite their bond and share issuance. So they provide a guarantee that they'll be able to find buyers for those things. And that's where they really, really shore up the industry and allow it to continue to thrive. How much of this have they been doing? Well, in the 8 years since the landmark Paris Agreement, the world's 60 largest banks by assets under management have poured $6.9 trillion into fossil fuels, driving climate chaos, indigenous rights violations, and deadly health impacts. If you crack the numbers, that amounts to around $2.5 billion per day that they've been propping this industry up with. In terms of who the biggest culprits of this are, this is the current list and the total amounts that they financed since the Paris Agreement, with JP Morgan Chase way out in front. Congratulations. And the other big four, the other big three in the US, not too far behind, Citigroup, Bank of America, and Wells Fargo. And us in Europe, I say Europe, I'm from Europe. Barclays and HSBC make a pretty good showing there as well. And you can see Canada with RBC and Scotiabank are there as well in the sort of top 15. But the curious thing about this is that even though they're pouring tens of billions of dollars a day, tens of billion dollars annually or whatever it might be, into the industry, typically these companies only make up sort of 2 to 15% in general of their entire portfolios, right? So it's not a huge amount in many cases, and it's pretty clear that banks don't need fossil fuel companies to survive, but fossil fuel companies do need banks, or else life's going to become a lot more difficult for them. So it's a very intentional choice that banks have to continue to support this industry. Okay, so what sort of going a bit further down the rabbit hole, I know this chart looks complicated, but I'm going to simplify it for you. In terms of the financing, currently around 50% of that is going towards expanding the fossil fuel industry. And that means, not just maintaining their legacy loans, but supporting fossil fuel companies to look for new coal, oil, and gas reserves for more fossil fuels to burn than they're already doing. And this chart explains how egregious that is. So you may be familiar with the term the carbon budget. That's the amount of carbon that we as a planet can continue to emit if we are to stick to certain preordained goals of temperature rise. And obviously the middle one there is the primary goal of the Paris Agreement, which is to stick to 1.5 degrees. And that's around 500 gigatons. This is actually a few years old now, so it's gone down somewhat, but I haven't found a more recent chart, but it still illustrates the point. So if we're to stand a 50-50 chance of sticking to the main goal of the Paris Agreement, we have that much emissions that we can burn. On the right, if we're to stand a 66% chance of limiting global temperature rise to 2 degrees, we can burn just over 1,000 gigatons. And then over there on the left, on this interesting one, you can see all of the developed existing fossil fuel reserves, right? So these are the carbon emissions embedded in current fossil fuel reserves that will get burned. This isn't like an approved oil field, right? This is already going to happen. And as you can see, that's enough to take us way past the 1,000 gigaton carbon emission goal, right? So budget, sorry, it's not a goal. It's very much not a goal. And that's it. And this is what we already have. And so then it begins to kind of, throw into relief like how outrageous it is that billions and billions of this funding is going towards continuing to look for more of this, right? When we already have enough to push us way, beyond the 2-degree limit. And what this shows us is that, the end to the climate crisis basically requires an end to the fossil fuel industry, starting with expansion, right? That has to stop before everything else. And then we need to have, a serious conversation about phase out targets and so on for the rest of the industry. No one's saying it has to happen overnight. And I think often people are talking past each other when they say, people talk to climate activists, they think, we need to, and to be fair, there are some that do think that should happen. I'm not one of them. But the piece that needs to go before everything else is the funding for expansion. And there's way too much of that that's still happening. Okay, and just to give another sort of look at a different lens to look at this through in terms of the energy transition, because what we're talking about here obviously is transitioning from fossil fuels to low carbon forms of energy supply. This is from a Bloomberg report, Bloomberg New Energy Finance. I really recommend having a look at them. And we as well are very interested in the ratio of financing that's going towards fossil fuels versus the ratio that's going towards low carbon energy supply. And this is a graph of what's happened to date and kind of what needs to happen in terms of financing for these different sectors. And at the moment we are, so to break this down, so if you see the decade on the right was the one we're in at the moment, 21 to 30, you can see there's a bullet point or a marker at the 4 point. What that means is in order for us to stay 1.5 or below, which many think is already becoming unrealistic, but we need to have 4 times as much financing going towards low carbon energy supply versus fossil fuels by the end of this decade. So for every dollar that gets put into fossil fuels, we need 4 to be put into renewables. And at the moment, we're just at 1 to 1. So we're way behind schedule, and that's why this graph has this massive kind of inflection curve. But again, it's just another way of showing the ambition that is required, across industries, across government, in order to achieve that outcome. And it's not impossible, but it just shows the scale of, what needs to happen. And again, makes it even more, unconscionable that banks are still financing the expansion of fossil fuels. So that's that. So what can we do? We've spent some time now going through the problem. We all know there's a problem. We know it's a severe problem. What can we actually do to take action on this information? So we at Bank.Green, our strategy is to generate public pressure to reduce banks' fossil fuel funding in several ways. So we have an online bank checking tool that's been used almost 500,000 times by bank customers around the world that allows them to check their own bank's climate impact. It's a pretty eye-opening experience for many people. And most of them come to our website, because they do have some degree of kind of climate consciousness or sustainability, wanting to be more sustainable in their lives. And so then we offer them ways to act on that knowledge. So in the best cases, we're really trying to promote the banks who are getting it right, who are investing in renewables and other climate positive initiatives. And so we do recommend them, and we recommend that people switch their deposits away, which has the dual benefit of divesting their money away from fossil fuels and investing it in banks who are going to be using those deposits to support loans they're making to green initiatives. We have a growing alliance of these that we're fossil free, so they have no exposure at all to the fossil fuel industry. And then for those, we understand that not everyone is in a position to switch. Maybe they're tied into some longer term financial products or mortgages, or they have other reasons that they love their bank and they're not quite committed to climate change enough to switch, but they would still want to take some kind of action. So then we give them tools and insights and resources that they can use to advocate with their banks to improve their lending practices. And then, yeah, we actually have a lot of probably too many projects on the go at the moment for now to mention. But we also, I was just talking to Caitlin earlier, we have a program that will be launching initially in the UK to accredit and recognize businesses across the country who do have a green bank and help them to understand that that is a huge form of emissions reductions for them. And it's a very positive thing that they're doing for the climate, and helping them to convey that to their customers as well. So that's who we are in a nutshell. I'm trying to think if there was I feel like, oh no, my bad, sorry, apologies. So the reason we do this is because we believe that the voice of the bank customer matters. The banks do listen to their customers. They are a really important stakeholder. Banks have pretty extensive retail divisions in many cases, and so it does matter to them from a bottom line perspective. And they don't want to see their customers unhappy or leave, like any business wouldn't, right? So the thinking goes that if we can get enough voices to join the chorus of pressure, then we can get these banks to improve their practices, just like any business would, if under enough pressure from their customers. Not only that, but banks are very sensitive about their public image. And we know that because we've received a lot of incoming messages from pretty notable banks over the years about their score on our website and how people are perceiving them. And so, irrespective of how many customers actually leave and how much it actually affects their revenue, headlines matter, publicity matters. They really do care about their reputation. So there's a lot of opportunity. We're trying to sort of be this conduit for customers to, again, broadcast their concerns on their social media, directly to the press, however possible, in order to let the banks know that, like, we're watching you, and you can't just do whatever you want. And this matters to us. It matters to our children's future, all of the above. And then thirdly, they care not just about their existing customers, but they care greatly about the cohort of customers that they haven't yet won, which typically are kind of college students, for example, who may have only had an account for a few years, or they may be opening a new account when they get to college. And so they're extremely sensitive. Again, also why they're sensitive about their reputation, because that's going to affect their forward-looking numbers and adoption by younger prospective younger customers. So yeah, that's the kind of third reason about why we feel this actually matters, and this is a really strong leverage point. And there is historical precedent for it. So between 1970 and 1986, there was a huge Boycott Barclays campaign that started by UK university students for Barclays' involvement in apartheid in South Africa. And it started with about 1,000 account closures from UK students, and then eventually kind of escalated to disruption of annual general meetings and all other kinds of direct action that these students took. And it was a very long fought campaign, but eventually it worked. And Barclays they pulled out of South Africa. They stopped financing companies there, and they just totally ended their presence. And that was all due to grassroots consumer pressure. And then similarly, the Go Fossil Free movement, sort of a subsidiary of 350.org, since around 2011, 2012, has been putting a ton of pressure on institutions around the world to divest from fossil fuels. And I think they have a list on their website of those that successfully have done so as a direct result of this grassroots pressure. And I think it's over 1,000 now. So again, just another example there that there is precedent for this type of action. Okay, this was what I thought was coming earlier, but it's not. This is the live walkthrough of the website. So I'll just quickly jump across. I'm assuming you can still see my screen, right, Caitlin? Please tell me if that's not the case.
You're good.
Yeah, cool.
Works perfectly.
Fantastic. So this is the Bank.Green platform, where you can start off with we obviously don't cover every bank in every country of the world, but we try to cover as much as we can. And we have a pretty good presence in the US. In fact, the US, biggest banks in the US have recently received like a big overhaul in terms of our rating. So this year we introduced a really sort of much higher resolution methodology for rating a bank's climate impact. We applied it to the biggest ones in the UK in April, and we've just finished doing that for the US. So if you're coming from the US, I invite you to check your bank, and you can have even more confidence that, at least our conclusion is a very solid, robust conclusion. You may disagree with it, but we've done a lot of work. It's usually about 2 to 3 hours per institution into researching, going through their annual reports, their 10Ks, lobbying databases, websites, every piece of data that's available on them to formulate this kind of picture as to sort of how they're doing on climate. So yeah, the homepage here kind of tells you a little bit of the story of Bank.Green and why we think this matters. And then, the obvious one to pick is Chase. Number one financier in the world. You get this unhappy emoji there, which is, if you don't read anything else, that's probably enough to suggest to you what we think of them. And then further information, telling you about like what they're doing, how much they've done. They're the top funder of oil and gas extraction in Arctic oil, for example, and so on and so forth. So that's kind of the general, and this is what will happen to us if we don't act on it. So that's kind of the general flow. And then, of course, we, in the best of cases, as already mentioned, if you want to look at our methodology, you can click on that here. But otherwise, you can go straight over to our Sustainable Banks directory. And here you can filter by whatever your needs are to find a sustainable bank. You can see which ones are part of the alliance that I mentioned to you, the Fossil Free Alliance. And hopefully you can happily switch your account and go to sleep knowing that your money is funding a sustainable future. So that's kind of like the primary user flow that we try to encourage. And then, of course, there are other forms of action that you can take, which I'm going to come on to very shortly in the presentation. We have a survey for people who've switched, so we can get some more information on that. We have a very nice blog, which has a lot of different topics between the US and the UK around sustainable finance, and particularly as it relates to banks. And then if you're feeling generous, we have a donate button as well. So yeah, that's just a quick kind of whistle-stop tour. We also have like an AI tool that we've developed, which is helping us with the rating process, so we can get it from like 2 to 3 hours per institution to less than half an hour ideally. And we are interested in offering this to other financial campaigners as well, so we have a page about it there. So yeah, that's just a quick run through of the website. Please do check it out when you have some time. And back to this.
Really quickly, Zach,
Yeah, of course.
Marina had a question. Does
Sure.
this also apply to private banking funds management?
We are mainly, I think we do cover some private banks, but they tend to be ones that have retail divisions as well, I think. So fundamentally, we're interested in those that have, individual business customers, those kinds of things. Yeah, because again, for the reasons mentioned, that we think that that's like the leverage point.
Do you know?
But I have to check on our US ratings, because I think we might include some that don't. But it'll be a small number. Yeah.
Do you know, is there another resource that might have more details about those banks that aren't listed?
Yeah, I think it's a great question. I think, firstly, the Banking on Climate Chaos report. So I didn't do a good enough job of like a lot of the data from the earlier part of the talk with the 6.9 trillion and so on. I should actually have a page that's just accrediting them. There is this annual report that comes out every year called Banking on Climate Chaos. It is kind of the seminal report every year that gets a lot of press attention, because it's the big numbers. That's where the 6.9 trillion came from. That number came out in March, and obviously it increases every year. And this report looks at the top 60 banks globally, which I believe would include some of those, but don't hold me to that. And then it also goes into much further detail about what they're doing in the Arctic, what they're doing in the Amazon, who's funding the most expansion, the effect that it's having on indigenous rights, indigenous populations, that kind of thing. So I really, really recommend taking a look at Banking on Climate Chaos. And yeah, there's a website that's kind of derives a lot of its data from there, in addition to ours, which is called Fossil Banks No Thanks. So you might want to check out Fossil Banks No Thanks as well as us ourselves. Obviously, we have our own methodology, but they have one that focuses very, very heavily on fossil fuels. So here is our methodology. We obviously also look at fossil fuel companies and projects and the amount of lending that's going to them. On the right side of the column, you see the flip side, which is lending to renewable companies or projects. So if we see a bank that does still lend to fossil fuels, but they don't lend to the expansion of the industry, and they have, say, 4 or 5 times as much lending to renewables, for the reasons I showed you earlier with that Bloomberg chart, they are still a Paris-aligned company, right? So this is where we diverge a little bit from some of the campaigning movement who are just like, get out of fossil fuels, the end. We're like, well, we have a slightly more nuanced approach, whereas like we obviously disagree with everything about fossil fuels, but if a bank is showing us that they're lending huge amounts to renewables relative to fossil fuels, then to us that's like a really strong indicator that they are adopting the right direction of travel as regards climate change, and that eventually they will be phasing out fossil fuels completely. So we look at their exclusion policies. First of all, do they have one? Many of them don't. And if they do, what type of fossil fuels do they exclude? Obviously, coal is a non-starter for us. So that's another factor. We look at, do they have climate governance at the board level? This can often be kind of a form of greenwashing because some of the bigger banks do actually have that, but they're still the biggest fossil fuel funders. But it's kind of the price of entry. We feel like you need to have that, or at least, in order to kind of begin to think about having more meaningful impact. Similarly, with measurement of their emissions, too many banks are still not even beginning to measure it, and what gets measured gets managed, right? And so they need to start being able, even though it's challenging, they need to be able to measure what are called their Scope 3 Category 15 emissions, which are those that all of these fossil fuel companies are responsible for, right? So it's like not directly under their umbrella, but they are the ones who are enabling it, and so therefore they need to measure them. And once they have measured them, they need to set targets for reducing them. And that's where the target setting comes in. We look for short and long-term emissions reduction targets is really important for them to have. And then finally, the lobbying history. And there are actually more things. So we look at green lending products and things as well. There are not too many of those in the US at the moment. But other than that, lobbying history is really important. So there's a website called Open Secrets. And the name of the other one escapes me right now, but there's a couple of them where you can go in, you can just type in any company and you can see exactly how and when they have been, lobbying against climate legislation, which is a pretty big tell as to how serious they are about climate change, I think. So those are the things that, as I mentioned, we've now applied to the US banking system. Next, we're going to be doing Canada, then Ireland. But yeah, that's kind of where we are with that. So taking action. What are the 3 things you can do? You can apply pressure, you can switch banks, and you can share the message. As mentioned, we'd like when people switch banks, but we acknowledge that it's not always going to be feasible for people. And so I'll begin with applying pressure. So one thing you can do is you can call your bank. We're a big advocate for calling for a few reasons. It's very easy, but it makes a big impact in terms of activating internal processes around how banks monitor their public image. It's also easier than going to a protest, but it's something you can do. Most banks do not get many calls about climate. You'll often meet someone who's quite surprised on the other end of the line if you call them to talk about their climate record. Most people are calling about why can't I log into my account, or why is my interest rate so high, and that kind of thing. So you'll definitely get their attention if you do that. So yeah, they trigger these internal feedback processes where the call gets logged. So you do need to remember to request that it gets logged, and then you start to inspire discussion amongst bank staff, and these issues do need to be addressed, and they get sent up the flagpole to the higher ups to actually give you a response. It's also, calling's better than email because it's more immediate, right? It's much less likely to get lost in the shuffle like an email can, and you can get confirmation from the person you're talking to that something is going to get done about this. You can ask them to follow up, when you should follow up with them, etc. So it's a really kind of impactful way to alert your bank. It doesn't have to be your bank, it could be another bank, that their lending practices, their underwriting practices are not something that you agree with at all. It's absolutely fine to speak to kind of low-level representatives, because as I mentioned, if you handle the call in the right way, you make the right request, it will get heard by those higher up the food chain. So we do think that's a good strategy, but we also really advocate advocate for calling the investor relations lines if you can find it. So you often have to do a bit of digging on the website to try and find it, but this is usually like a smaller group of executives who have a direct line to senior management, and they have more knowledge about fossil fuel policies and that kind of thing. when you call, like it's totally fine to be nervous. I have been when I've called in the past. So you should try to have some talking points. You can use the call as an opportunity to investigate their fossil fuel policies, right? Because there's often going to be some gray areas. But if possible, have a look at the our take action section on our website that I actually forgot to show you when I was on the website. There's a whole take action section that gives you some general talking points about your concern about this issue. And then the second website that I recommend, I said Fossil Banks No Thanks. That's the name of the campaign. The actual website is fossilbanks.org. And between the two of us, you can kind of triangulate and see like what are the most, I would say the Banking on Climate Chaos report is great as well. So between those three resources, you can really uncover like the kind of, the most questionable, horrible things really that a lot of these banks are doing. But even though they are horrible, like it's obviously important to recognize the person you're talking to is an employee. In many cases, this might be the first you're even telling them. Probably not if it's the investor relations line, but especially if you're calling the regular line, this might be the first they're even hearing about what their employer has been up to, right? And you might even find a sympathetic ear, which is what you want, right? And then you can kind of like, we're on the same side here. How do you feel now? I mean, I wouldn't ask them so directly, but they'll be asking themselves like how they feel about working for a company that is working against their own interest, the interests of the planet, its inhabitants, all of that. So definitely don't be aggressive, but it's important to also be firm and let them know that you're calling because this is an issue of serious concern to you. But the most important thing is to kind of get the message across, and to let them know that you're like a human who really cares about this. It's totally fine if you go off script, even though it is good to have those talking points. And then just to avoid long waiting times, and so you don't resent doing this, we definitely suggest kind of calling it at the beginning or the end of the bank's business hours. If you're a customer of the bank, tell them that. It's great. It's a great form of protest and climate action to call other banks and just say you're concerned. But if you are a customer, they're likely to give it a little bit more, importance. And then, as already mentioned, when the call is finished, you do need to ensure that they log the call. Similarly, if you end up switching banks, you need to let the previous bank know why you're switching, or the whole thing wasn't done in vain, but like that's a really important step for them to get that feedback from their customers. And this point, I think I just addressed it, which is that nerves are completely normal and it's okay. And I still encourage you to be brave and do this. And as mentioned, they could very well agree with you and be even more motivated to follow up on it and come back to you and try to get some answers. And the whole goal of all this is to, it's a grassroots movement. It's about human-to-human interaction. And the more of these types of interactions that we can encourage, the more that kind of trickle turns into a waterfall of pressure that the banks eventually have to act on. So again, don't worry if you go off script or if you say something that you didn't quite want to say or that kind of thing. The most important thing is that they understand that you're really concerned and you would like them to take further action on that concern. Okay, so switching. Obviously, the more people we can get to switch, the more the kind of people power part of all this begins to bear fruit. You can either pledge to switch on our website if you're not in a position to switch at the moment. And that allows you to kind of put a future date where we will follow up with you and remind you. We have lots of steps on how to switch on the website and recent blog posts as well that cover this for the American context and the UK context. It's usually the headline is that it's a lot easier than you think, most likely. Most people don't think it's easy, it really is. And then, as I touched upon, you do, to complete the action, you need to sort of tell your bank why you're switching. And then once you've switched, we have a whole raft of post-switch impacts that you can take to kind of maximize your impact, like sharing the message, like helping us with kind of a video testimonial, leaving a review on review of your old bank, leaving a positive review for your new bank. So there's more than you can do beyond that, but switching is a really powerful action. I think that's correct. Yeah, so sharing the message is also super important. As mentioned at the beginning of this presentation, 80% roughly, so this is a study that came out 2 or 3 years ago, that found that 80% of customers, this is in the UK obviously, at Barclays and HSBCs were unaware of their bank's fossil fuel financing record, such as my friend in Extinction Rebellion. So huge number there, huge opportunity. to close that knowledge gap. But when they were informed of this, 12.5%, who represent millions and millions of bank customers in the UK, said that they'd be very likely to switch. So that's the opportunity that we have, and to really kind of get this to snowball, and that people power part of the movement to really play out. Flashy PR campaigns are effective, but social movements are built on human relationships. So I think the way we reach this is by having everyone share the message, right? That's the title of this section, and I think that's something that everyone can do. Even if you don't want to switch, even if you don't want to advocate with your bank, you can talk about this and you can let people know, did you realize that your bank quite likely makes up a significant part of your carbon footprint, and that you can do something about it. So I think it really goes a lot further. Social movements go a lot further if people you trust come up to you, instead of companies or whoever, and tell you this is a real thing, here's what you can do about it. So here are just some examples of people who've used our website to share the message, not necessarily with their family, but on social media, where they've sort of expressed their concern and discontent at what their banks are doing. And on the flip side, on the right, you can see people are very happy, relieved to find that their bank is actually one of the good ones, and so they're we also encourage people to boast that they have a green bank. In our world, all of the banks on the other side of the equation become green banks, right? So we don't want to demonize them. I know I use word evaluative judgments right now, and I'm comfortable doing that. But the way that we get them to change, I think, is to not other them too much, or say that they're beyond hope, but there needs to be also an element of showing them how they can improve. And that's kind of what our methodology aims to do as well. It's these are the areas that you're clearly falling down on, and we'll be happy to help work with you to improve them if you can. Similarly, we've engaged in something called green trolling before, because here's an ad that basically what it is calling out greenwashing, and there's a lot of greenwashing that happens amongst banks. That's why a lot of people have come to us before and been like, oh, I had no idea that HSBC wasn't sustainable, because they always talk about how sustainable they are. They have very well-resourced PR departments, and so occasionally we like to call them out. And Barclays was talking about how much they're doing to finance and help the transition. We think they're doing more to hinder it. And so we corrected one of their ads that said, we finance and advise companies, to we finance and advise fossil fuel companies. It's a great way to call them out, and also to kind of get that public discourse ball rolling and have people really start to generate conversations about this. So that's something, if you see an opportunity, you might want to engage with as well. It's a little cheeky, but we're okay with that. So what's next? Well, the first thing you can do, if you haven't, is to check your bank score on our website. You can decide which type of pressure you might wish to apply from those that I laid out. And then, of course, as mentioned, all social movements are built on this human-to-human element. So you could also, it's not an or, it can be and, that you can also share the message with your nearest and dearest, encourage them to go on the website, encourage them to check their bank, and to identify which the greenest banks are that they might want to switch to, assuming they don't already have one of them. Bonus would be to come and volunteer for us. If this is a cause that really resonates with you. As mentioned, we are powered by around between 40 and 50 volunteers. And yeah, we're grateful for anyone who wants to come and help in one of our different departments. And then if you go to Bank.Green/join, you can sign up to our newsletter as well, where once a month we talk about the biggest news stories on both sides of the equation, both on the fossil banks and the sort of the climate destroying things that are still happening, and then we try to include as much kind of positivity there as well, about on the flip side, sort of supporting the green bank movement as well. And that's it. Thanks for the chance to talk to you guys, and I'm very happy to take any questions.
Amazing. Thank you so much, Zach. I think it's really it's such an interesting issue, because I don't think a lot of people know about it or think about it. We've chatted about this a little bit, that you have your money in the bank and you think that it just kind of sits there waiting for you to take it out at some point, but you don't realize that actually your money might be working to do something that's not so sustainable, like financing fossil fuel expansion, or,
Right.
investing in indigenous horrible things. So I find it really just such a simple thing as well, just understanding what your bank is doing. And I love the idea of being able to, have different options, because of course, as you said, it might not always be possible to switch your bank, but being able to advocate and put pressure, I think, is really important. I, as always, have 1,000 questions, but of course that we're much more interested in what everyone else is curious about. So I would love to open up the floor and see if there's anyone has a burning question that they would like to start off with. Otherwise, of course, I'm going to get started. Anyone have any questions for Zach right away? Okay, well, yeah, Marina, did you have something you wanted to ask?
I wanted to know how to how to go deeper in the conversation with the bank, because it's not easy when the bank is looking to uh, another point of view, and then we asking, it will be quite provocative. So I wanted to know, in your experience, which would be possible answers, or something that maybe encourage us to start the conversation and continue the conversation.
Yeah. So I think I think there's no clear answers to that, because the banks that have been very sort of steadfast in their fossil fuel investments have been very slow to act. So it hasn't always been like super clear like which kind of strategies will bear the most fruit. As mentioned, we just know that there is kind of historical precedent for this type of thing, and so I think obviously the strategy that we are encouraging is getting customers to talk to their banks and to express their concern, and just be very clear about like what they're concerned about. And expansion is an area that I focused on a lot on the call. So if you're with a bank that is continuing to finance expansion, you have a very clear talking point there, which is that how can you possibly claim to be aligned to the goals of the Paris Agreement and have these net zero targets and all this kind of thing when you're continuing to do something that's working explicitly against that goal, right? So I think that there have been victories, there have been successes. In the UK, there's a group called Share Action, and they pressured. They're an NGO, so sort of part think tank, part activist group, and they, due to their pressure, HSBC pledged to phase out their coal financing by 2030. And it's a combination of things. I mean, they would get headlines, they would get conversations with the executives, they would rally support from investors, right? And they Share Action, as the name would suggest, are very focused on investment as well. And so I think it's a bit like acupuncture. You apply pressure in a lot of different areas, and you hope for the desired outcome. I think so. There is evidence that the activist movement is kind of working. Like I just called out HSBC, but there are other examples. And we believe that elevating the voice of the customer in the conversation is a tactic that hasn't had enough airplay, if you will, and so we do everything to kind of act as that conduit to help inform the customers so they can have those conversations with their banks. And we're trying a bunch of different things. I mean, I could talk for a long time about the different areas. I mean, we just had a call this morning with our funder. We have had some funding this year for a project around compliance. So our banks complying with their own sustainability policies that they are putting out there publicly and telling people these are the promises we're going to make. They're not always legally binding, but they can be, and they could lead to sort of shareholder action lawsuits, consumer action lawsuits. And so we're using AI in some creative ways to kind of break down these policies, compare them to lists. There's something called the Global Coal Exit List, I think, GCEL. And these are a list of companies that like shouldn't be funded by anybody, basically, because they just have no, ESG concern or anything like that. And so then we look at these policies and we kind of look at these lists, and then we do comparisons to be like, okay, what's the language in this policy and what are the attributes of these companies that might prevent this bank from financing these companies. And then we look at, for example, the Banking on Climate Chaos data that I've mentioned, that report that comes out once a year that tons of data has gone over, and we look at what these banks are actually financing. And then when we have all of those pieces, we can be like, okay, what are they financing that based on their policies they probably shouldn't be financing, and is therefore probably a violation of their own promises, right, to their customers. And so we were talking this morning about that, and it was an exciting phone call, and the goal there is to narrow this list down for the major banks in the world, and get some headlines, get some press about this, like let the world know. That comes back to the reputational issue that I mentioned, right? So that's a different angle of attack in addition to the other ones that we've been talking about. So yeah, there isn't a silver bullet, I think, is the short answer. And we're trying different approaches, and whichever ones have the most give, you could say, we're going to keep doubling down on those. Yeah.
Thank you.
And thank you so much. But that would apply for Latin American banks or banks in Latin America, because we have lots of banks that are leaving Latin America. HSBC, for example, was just bought by a Argentinian bank, and is not more in the country. So I wanted to know which is your point of view on that.
In terms of sort of expanding beyond the global north, or yeah.
Yes, because the narrative or the way you talk about in the northern countries, maybe it's quite different to the ways we need to talk in the southern countries, and the contexts are different. So maybe the approach has to change. That was my question.
Yeah, I would agree with that. I think we're still somewhat constrained by the fact that we're volunteer driven, and we only have X number of hours. So our main targets, if you will, are the sort of the banks in English speaking countries. That's not like a bias that we inserting. It's just that we can proceed a lot more efficiently that way, which also happen to coincide with some of the biggest financiers of fossil fuels. So you saw that chart that I showed you, is that those top 4 in the US are consistently in the top 6 of the biggest financiers of fossil fuels in the world, right? So that's where we think if we can get one of those to fall, that the others would follow suit like dominoes, right? So that's kind of our strategy. That is not to say that we don't care at all about banks in Latin America. I'm based in Mexico City. BBVA is very, very popular here, for example, and they, I believe they're also in the top 60. But it's more like we haven't really gotten around to formulating a strategy yet. But while the ones at the top of our list still haven't done enough. So yeah, I'm sorry. I wish I could give a better answer than that. But and absolutely, there will be different contexts to consider, different pressure points. But yeah, we just haven't managed to sort of get to that point yet. Yeah, to be entirely honest.
Thank you.
Yeah.
That's a good question. And actually, do you have partners that are working in different parts of the world on the similar issue? I know we've looked at, banking on climate chaos, fossil banks, open secrets, these links, which I've shared in the chat.
Yeah.
I don't know if there's movements in Latin America, or even in Africa, there's so much corruption. Is that something that is being addressed by anybody?
I think the answer is yes, it is. But again, not to sort of sound like a broken record, but we tend to just follow the money, right? Because it's every dollar has an emission value attached to it. And right now it's the US, it's Canada, it's Japan. There's a lot of LNG growth in Japan where all of this funding is taking place. So while again, not at all to discredit or belittle any of the other sort of parts of the world where there's equally outrageous things happening from a banking perspective, I feel like strategically we're kind of following the money, and that Banking on Climate Chaos list that I keep coming back to is like a nice rundown of where the money is flowing, and it tends to be in these global north countries that that do have more funding sort of to spend, that's the richer part of the world, and that they're the ones causing the problem for everyone in the global south. So I kind of, in a roundabout way, we feel like if we attack it at the source, then everyone will come to benefit. So yeah, we definitely we have partners. Our funding partner, for example, is what's called like a direct action network, where they fostering relationships in multiple parts of the world. Like, I'm not in their meetings, so I don't exactly, I just know kind of through conversations with them that that's happening. But we as an organization tend to stay quite focused on, essentially the US and Europe, UK and US as well. Yeah.
Well, once again, we all know that when we're talking about sustainability, there's so much to do that we all have to focus on our part, because
Yeah.
otherwise we'll get overwhelmed. So I'm not judging. That's a very, very important. So thank you so much. Did anybody else have any questions for Zach? Okay, if they come up, they can, but I'm gonna be selfish here, and I had a question for you, because this is actually something I've been thinking about as well.
Sure.
Because you were talking about the funding for expansion, and I think that this is what just absolutely boggles my mind, is that there's so much money being invested into expanding fossil fuels, building new oil rigs, building new pipelines, like the infrastructure expansion. And then the argument against like renewables is that, oh, well, we can't switch over to renewables because we don't have enough investment in the infrastructure. We need more money going into that. It seems to me that it's just literally a switch of where the money is flowing that's basically preventing us from a renewable economy. So
Yeah.
how do we get people to realize that it's just about like, it's not impossible to do if we just take the money out of investing in here and invest it over here? Like, what does that even look like? Is that possible? Is that a crazy dream? Like, I'd love to hear your thoughts about that.
Yeah, I think it's 100% possible. And this is when we're talking about expansion, that is the disposable capital, if you will. It's the money that's not tied up in existing loan agreements, legacy agreements that have to, reach their expiries. And so that's money where a bank has a very clear-cut decision, and they're deciding to allocate it to energy. They're just doing the wrong form of energy, right?
Yeah.
Because it's sad, but in many cases, even though kind of globally on average, renewables, the latest data kind of suggests that they are cheaper. It doesn't always mean that they're more profitable, and I think banks are very much driven by profit and above all else. And the regulators obviously have a much greater role to play in enforcing these phase outs and accelerating these phase outs. Even aside from subsidizing and incentivizing renewable investment and loans, I think it's enough. It's a good start if they would do more to restrict banks' financing of the coal industry, for example, which still happens. I think 50 billion from the US was last year how much went to coal, and so they have a huge role to play as well. So there's all these different stakeholders that can move things around to kind of reach that outcome. The one thing that's clear is that too many of the banks are just not interested enough, because they haven't been pushed in the right direction, right? So you could take a more kind of like neutral look at it and be like, well, they're for-profit companies, so what do you expect? Like, that's kind of what they're going to do. But that's, for me, that's not enough. Like, we're humans. They're the executives at those banks have families, they have children. Like, they know on some level that this is wrong. This is harming the planet, and it's going to lead to like a worse future for everybody. So it is that simple. But we just need to exert the right forms of pressure, and by we, I mean collectively as a society. Like, the customers, the regulators, the investors, the journalists, all of the above, because they're not doing it themselves. It's very clear they're not doing enough. They're not acting fast enough. The money is there that can be switched from fossil fuel expansion to renewables. It just requires the will for them to do it. And yeah, it's unfortunate that it requires other actors in order to instill that in them, but that's just the reality of the situation, unfortunately. Yeah.
And I think this is what just like boggles my mind, is that like, yeah, there's the argument, okay, it's more profitable to stick with fossil fuels, but at the same time, you're seeing other companies, you're seeing banks that are like Triodos, they're very successful. And
Yep.
so it's not that the model doesn't work. It's just, once again, a little bit of like, in inertia, maybe, like if it ain't broke, don't fix it. Like we
Yeah,
don't feel the need to change because we don't have to.
I
But
would
it,
agree.
like, that's where the have to comes in. I think that's where we come in. And I was very impressed with your statistics around, customer impact around banks. I think that's interesting that there is such a high driver of, public image and, what your customers are saying. And I think that's where we come in, is that, as consumers, we've always talked about where we put our money, but we don't talk about the fact that our money is in a bank too. It's not just about what we buy. Our consumer power is not just purchasing
Yep.
power, but it's also storage power, if you will, investment
Yeah,
power.
that's exactly it. So I mean, there's two awareness gaps that we're trying to fill. One is the one that you really did a great job highlighting earlier, which is that first of all, people don't put their banks in the same category as they do like the clothes that they wear, right, or the cars they buy, or that kind of thing, which are real brands. But they should, like your money. And you may have seen the illustration when I did the walkthrough of the website. We have this coin dropping through a piggy bank that drops through onto an oil rig, right? Most people stop at the piggy bank, and that's how they think their bank. You just put your money, it's there. You need take it out when you need it, and that's the end of it. But it's like no, no, no. Banks are using. How do you think they make money? Like they're using money to make loans. They get a return on that loan. Those loans can be for good or for ill, and you are contributing to that whether you realize it or not. So that's kind of the first awareness piece that we try to solve. And then it's like now you know that your bank is much closer to a brand because they're having a real impact in society. What are you going to do about it, like to influence that, you know?
Yeah.
Um,
Yeah.
but
Yeah,
yeah,
and I think what you said also about, contacting your bank. I know we had to, just full transparency, and we've talked about this as well. So we have the nonprofit Key Culture, which banks with Bunk, which is green, and they
yep,
have a big fat smiley face on your website, so that's great.
yeah,
When we started the for-profit, Bunk said that we didn't qualify, and our accounting firm insisted that we use ING. And of course, ING has a sad face, so we don't like that.
right,
And when I went to ING to open the bank account, I was basically forced to do this because Triodos takes so long to get a bank account, which is another story. We're still trying to switch over, and it's been a year, and we haven't been able to yet, but we're trying.
yeah,
But when I went to open the bank account at ING, I just asked them straight up. I said, "Can you tell me about your fossil fuel investments?" And the
yep,
guy was like, "Yeah, like we do invest in fossil fuels." And I said, "How do you feel about that?" And he said, "I hate it. Like, I don't like the fact that like my company is contributing to like the destruction of the planet. And
yeah,
as employees, we are trying to put pressure on our upper management to, bring this up and talk about it." And I think he also felt relieved to be able to talk to a customer about that and that the customer cared. So, as you said, you can also find allies in this. And I think that's really important. And what we ended up doing was we wrote a letter,
mhm,
to the bank president, and just sent it saying like, "Listen, we're a customer, we're not happy with this, and here's some examples of, banks that are switching to better practices, and we'd like to see you do that as well." And then we
yeah,
published that online, and it was just, that was kind of what we did. But I think calling, that's a really interesting approach as well. But would you guys do you guys have like some examples of like questions that you can ask, or conversations, or maybe templates of like,
yep.
how to publish this online, or how to send an email?
Absolutely. Take action section of our website that again, in my rush to show you, please check that out. We have all of the above. And if you feel like we need more, please let us know and we can provide you with maybe a custom talking points if that would help. Yeah.
Wonderful. That's
Yeah.
brilliant. Amazing. All right. Well, a huge, huge thank you to Zach for being here today and for sharing your brilliant knowledge and extensive experience with us. I think it's really, once again, like coming from the cultural sector, it's something that we don't typically think about, and we don't think about necessarily from a personal perspective, but also from a institutional perspective. And it may be worth going to your university if you're a student, or your museum CFO, or account manager, and just saying, "Hey, like, what bank do we use?"
Yep.
Let's start the conversation, and let's, use Bank.Green, and let's check it out, and let's see if there's something that we as a field can do to help move the needle a little bit. Because I think it looks good from a bank's perspective if they have if they have a museum banking with them, and it looks
Yep.
really, really bad if the museum all of a sudden says, we care about sustainability, we're leaving Chase. We care about sustainability, we're leaving Bank of America. So, you know, I think that we have a serious power card and a power play here that we can play with. So I'm
Yeah,
excited to see what we can
and
build.
just as a on the heels of that, just a quick plug again for the accreditation. I mean, that's the whole point is to help these institutions to be recognized amongst their audiences for making that important decision, and that's what we'll be launching in the coming months, and it'll be open. You know, we're starting off in the UK, but we'd certainly consider if someone wanted to be accredited in other countries, for example. So yeah.
Fabulous. Well, look forward to seeing that rolling out. And yeah, keep us posted, Zach. Bank.Green will be featured on our Sustainable Solutions Circle, which is launching very soon. And so we're really excited to continue spreading the message. Tell everybody, tell all of your friends about this. Let people know that this is something that's really easy that they can do that has a huge, huge impact. So a huge thank you to Zach and your entire team for your tireless efforts, all your hard work, and really for bringing this to our attention. Because it's a big deal, and it's exciting to know that something that we have this much control over is something that we can have this much impact in. So
Yeah.
thank you so much.
Thank you too for all the work you do, Caitlin.
You're amazing. All right. Thank you so much, everyone. See you next week for our materials workshop, and looking forward to continued conversations on sustainable finance. And of course, if you need anything, if you're interested in continuing conversations around how you can support sustainable finance in your personal life or your institution, we're here. Bank.Green is here. So let's make some changes. Everyone have a lovely Tuesday. Thanks for joining us, and we'll see you next week.
Thank you, guys.
Thanks,
Thank you
everyone.
so much.
Take care. Bye.